This is the argument. So Philip Lowe says quite openly, if there is any sign of inflation spiking or being persistent, I will go again. I will raise interest rates again. But the action says, no, now we're going to sit and have a little bit of a look at it. How long can the Reserve Bank sit and have a bit of a look at these types of conditions without it becoming a problem for Australia's economy? That, in other words, that cliff, the narrow path they talk about, becomes even narrower for them.
Well, what they don't want to do is get to a situation where the economy gets away from them and they have to jack up rates by 1 or 2 percentage points.
Which then tips us over into recession.
Well, we can guarantee a recession on that. So that's the thing we've got to avoid. And the question now is, what is the level of the cash rate before you can have a genuine pause? And I don't think the pause last month was a genuine pause. I'm talking about the ability to sit back for 6 months. And that's where I think the Fed had got to, around a zero real interest rate, i.e. a 5% Fed funds rate. And that's why I think for the RBA, it's going to be a 4 to 4.5% cash rate before they can be genuinely comfortable to sit back.
So here's the interesting thing. You look at this, though. The markets right now are saying that there's only a 17% chance. That's as of before this decision, or this inflation number came down today, 17% chance of a rate rise in May next week. But if you think about that, that's an 83% chance of no rate movement. Yep. Markets didn't move that much off the back of these today.
A little bit of a move lower in the percentage. I think the market's going to be putting a 1 in 10 chance on it. The market's looking for an extended pause. Money markets are all looking for rate cuts at some stage, and I think this is a function of buying of bonds. And I think the RBA would be careful to be focusing too much on that.
It's going to be interesting. Warren Hogan, always good to have in the program. Many thanks for your time today.
Thanks, Ross.